Hello students, welcome to BYJU'S classes. Very recently, Government of India has announced the merger or the amalgamation of three public sector banks, that is Dena Bank, Vijaya Bank and Bank of Baroda. In this particular video lecture, we will discuss various issues related to this kind of a merger. But before I start having a discussion related to this particular topic, a very important announcement. Many of you have been requesting the PPT that I am going to use in this particular video lectures as well as the notes related to these particular lectures. I am very happy to announce that henceforth whatever video lectures that I do, the PPT of this as well as the handouts related to this particular lecture will be uploaded in our website. Please download these particular PPTs as well as the notes, make the best use of these particular notes. So let me have the discussion related to a very important topic for this year mains as well as the next year exams of UPSC, that is the merger of the public sector banks. The points that I will be discussing in this particular video lecture will start with the various concepts or the introduction related to this particular topic. Then we will ease into what is the need of this particular merger issue. Is there any need of it? What are the arguments in favor of these kind of mergers? Next, we will understand what is the proposal given by the Government of India, what is the process that will be followed, as well as what are the arguments put forward by Government of India in this particular case of the merger of three public sector banks. After this, we will try and analyze what are the benefits or the advantages of this kind of a merger of these particular banks, the concerns or the issues or the challenges related to this merger, and finally, what is the way forward? What is the conclusion after studying all of these particular issues? So let me start with the first concept, that is introduction. Now first of all, so let me start with the basic differentiation between the concept of merger as well as amalgamation. In the last 1 week, if you have read the newspaper very carefully, some of the experts will use the term merger of three PSBs and remaining experts will use the term amalgamation. Now what is the basic difference? The difference is that in case of a merger, let's say entity A will be merged with entity B, and once entity A is merged with B, A will lose its individual recognition or identification. To quote you two very recent examples is Bharatiya Mahila Bank was merged into SBI and 5 associate banks were merged into SBI. And with merger, there is no individual recognition of these particular entities. Presently, there is only SBI. So basically, in case of a merger, one or more entities will be merged or will become part of another entity. And once it becomes a part of the new entity or the acquirer, it will lose its recognition. Whereas in case of amalgamation, let's say two entities A and B will be joined together to form a new entity, let's say C. So basically in case of amalgamation, it will lead to rise of a new entity, whereas in case of a merger, the one which is being acquired will lose its identity. Now the problem is the Government of India has not clearly defined whether it is going to be a merger or it is going to be an amalgamation. That is, whether the two banks will be merged into one and only one bank with the same name will continue to exist, or all the three will be joined together to form a new entity. So basically that is the reason why experts have been using amalgamation as well as the concept of a merger or the term merger in their discussions. Whatever it is, right now the detailed plot or detailed plan by Government of India has not been given. So let's go with the concept of a merger itself. Next one is Narasimhan Committee. Narasimhan Committee is also referred as CFS, that is a Committee on Financial System. This particular committee was set up back in the year 1991. It is very famous. Why? Many recommendations of this particular committee have been implemented over a period of time by Government of India, and these recommendations are basically in terms of consolidating the banking sector. For example, the concept of a big bank, the concept of a mega bank, concept of a credit information system, or a concept of a narrow banking, all of these are the recommendations of Narasimhan Committee. But please understand, there are two rounds of Narasimhan Committee. One round gave recommendations back in the year 1991 and the second recommendations were given in the year 1998. But in the present context, which recommendation is very important? In the present context, the recommendation of 1991 are very important. Why? Narasimhan Committee in the year 1991 recommended that there should be a 3-tier system in India. That is, the banking system must have 3 tiers. At the topmost level, there must be very big banks. Below that, there must be nationalized banks, and below which there must be regional banks. So basically, the recommendation of having a consolidation in the banking sector came from Narasimhan Committee. Third, the UPA government proposal. Back in the year 2007 and 8, the UPA government discussed this idea of a consolidation in the banking sector. To be more precise, post LPG reforms, the idea of a consolidation was proposed by Narasimhan Committee, and various other Asian countries such as Malaysia, especially post 1997 Asian financial crisis, actually went forward and conducted a consolidation in the banking sector. But since India was not part of the crisis, or India was not affected by this particular financial crisis, there was no consolidation in the banking sector despite being recommended by Narasimhan Committee. But after this, there are various banks which were consolidated or which were merged into other banks because of their financial weakness. But in the year 2007 and 8, UPA government actually put forward a plan to consolidate and reduce the number of public sector banks. But having said so, because of various political pressures, the UPA government did not go forward with respect to the consolidation in the banking sector. But post 2014, again I am referring to 2014 for a simple reason, UPA government was replaced by the NDA government. So post 2014, the NDA government has vehemently or has vociferously promoted this idea of a consolidation in the banking sector. In the recent times, the NDA government has merged the 5 associate banks with SBI, the Bharatiya Mahila Bank with SBI, also has promoted privatization in the form of a majority stake in IDBI being sold to LIC. So basically this kind of a consolidation in the banking sector is being promoted by the present government of India. Now, what are the reasons why this kind of a merger is necessary in Indian banking sector? Some of the reasons are: 1, the number of public sector banks are very high in India. Before 2014, the number of public sector banks were around 27. That is 19 banks which are exclusively owned by government of India, that is nationalized banks. Apart from that, we had 1 SBI, we had 5 associates of SBI, we had 1 IDBI, and added to this list was another entity, that is Bharatiya Mahila Bank. So put together, there were 27 public sector banks. In whichever angle you look at it, the number of public sector banks are very high. Despite this particular number presently being 21, assuming these 3 entities are individual today also, even the number 21 in case of public sector banks is very high. Why? All these are majorly owned by government of India, and all these are basically fighting to acquire the same customer. So it doesn't make any sense for multiple companies of the same government or the same owner to fight to acquire the same competitor, or to fight to acquire the same customer, and to fight in the same market. So basically the objective is what? Reduce the number of public sector banks. And one of the ways that the government of India is trying to do now is to promote consolidation by merger or amalgamations. And the other way, which already the government of India is tried, is privatization. Now it is a matter of a debate whether LIC purchasing IDBI is actually privatization or just a shift of the ownership. But nevertheless, the government of India says it's privatization. So let's go ahead with the idea of a privatization itself. So basically the idea is what? The number of public sector banks is very high and you need to reduce the number of public sector banks. Second, the requirement in terms of recapitalization for government of India is also increasing. To just give you some of the facts, couple of years ago, that is in the year 2014, the government of India announced that they will provide a recapitalization of around 70,000 crore rupees, but in a span of 5 years, that is through budgetary allocation. In the first 2 years, they allocated 25,000 crore rupees, and in the next 2 years, they allocated 10,000 crore rupees. So basically the government of India said they will provide a recapitalization till 2019. But over a period of time, the government of India has realized that this amount of a 70,000 crore rupees is not sufficient for the banking sector. As a result of this, last year itself the government of India has extended this particular idea for recapitalization from 70,000 crore rupees to more than 2.1 lakh crore rupees. But having said so, all of you must be knowing this. The concept of a recapitalization package is just a curative measure. This will not preempt or prevent the creation of NPAs, and as per financial stability report of RBI, the NPAs in the banking sector are going to increase in the financial year 19. As per this particular report, in the financial year 18, the NPAs were to the tune of around 11.6%, and in the financial year 19 they are going to balloon to 12.2% of total loans issued by the banking sector. And the same report also makes one more concerning point, that is, if the situation goes beyond control, that is, if the situation worsens rather than limiting to 12.2%, the NPAs may actually balloon to 13.3%. So basically, as NPAs keeps on increasing, the burden or the pressure on the government of India to maintain the financial stability in the public sector banks will also increase. So thereby, what if these particular banks are either privatized or merged? The pressure on the government of India to provide a recapitalization will automatically come down. So that is second reason why this kind of a merger is required. Third, it is becoming burdensome for RBI to regulate all the participants in the banking sector. On one side, RBI has to regulate niche banks or differentiated banks, RBI has to regulate P2P, RBI has to regulate regional rural banks, RBI has to regulate the scheduled commercial banks, which are private sector banks as well as public sector banks. Since the number of banking units have kept on increasing, the burden to regulate also has increased on the shoulders of RBI. So what if the number of banks under the public sector banks are reduced? The burden on the shoulders of RBI will also come down. So regulatory burden on RBI will also come down. And fourth, the most important concern for the banking sector presently, that is non-performing assets. The burden of non-performing assets are very high. The NPAs, as already mentioned, will continue to increase even in this particular financial year. And when the NPAs increases, the burden on RBI, the burden on the government of India, as well as the pressure on the banks themselves will also increase. So basically, if the number of public sector banks are reduced by the concept of either privatization or mergers, the banks can use economies of scale. What is that? We'll understand in some time, but essentially the banks will be able to use economies of scale, the assets will be pulled in, NPAs to certain extent can be controlled. And finally, as already mentioned, this is a recommendation of Narasimhan Committee 1991, that is to have a three-tier structure within which he says the nationalized banks should be in the range of 8 or 6 to 8 to be more precise. So these are some of the reasons why the merger is required in the present context. So what is the proposal given by the government of India? The government says two strong banks, that is Vijaya Bank as well as Bank of Baroda, will be merged with a weaker bank, that is Dena Bank. Now what are the numbers related to this particular deal? Again, is it a requirement to mug up all these particular numbers for UPSC? Not required, but what are the numbers that you need to understand? These are some of the numbers. One, the merged entity or the new entity, the total business will be around 14.8 lakh crore rupees. And as a result of this merger, this particular bank or the new entity which will be created will be the third largest bank in India. The topmost or the biggest bank in case of India is SBI, second largest is HDFC, and this will become the third largest. Now the question could be asked in two ways here. One, is it third largest or second largest PSB? Please understand this. Once the merger happens, this will become the third largest bank in India and second largest public sector bank. Earlier, SBI was the largest bank as well as largest public sector bank, and the second largest public sector bank was Punjab National Bank. And since the merger or the new entity will be created by merging Dena Bank Bank of Baroda as well as Vijaya Bank, the value of this particular bank or the business of this particular bank will be much higher than Punjab National Bank. Hence, this will become the second largest public sector bank and third largest bank in India. So, one is total business, second one is deposits. After the merger happens, the total value of the deposits of all the three banks will be more than 8.4 lakh crore rupees. Third one is the number of employees. After the merged entity, the total number of employees will be more than 85,000. This will be one of the biggest concern of the new entity. Net NPA is going to come down to 5.7%. Why? The Bank of Baroda, because of its prudent asset quality recognition measures, has very less NPAs, that is 5.4. Vijaya Bank has much lesser than this, 4.1. Whereas Dena Bank, the net NPA is around 11%. And Dena Bank is the weakest of all the three banks. And in this year itself, Dena Bank has been put under the prompt corrective action, which is one of the measures to control NPAs which has been implemented by RBI. And in the month of March, RBI has directed Dena Bank to not issue any kind of a credit in the market. So, the two banks will be subsuming the NPAs of Dena Bank or the troubles of Dena Bank, as a result of which NPAs of the merged entity will be 5.7. So, the next one is CASA ratio. CASA basically stands for current account as well as savings account. A bank will collect deposits in multiple forms, but the cheapest source of borrowing by a bank is through current accounts as well as savings accounts. Hence, if the CASA ratio is very high, that is, out of the total deposits, current accounts as well as savings accounts are very high for a bank, then it has borrowed at a cheaper rate. Hence, a higher CASA ratio is considered to be favorable for a bank. So, you can see that the CASA is favorable for Bank of Baroda as well as Dena Bank. Although it is slightly on the lower side for Vijaya Bank, the merged entity or the new entity will have a CASA ratio of 34, which is considered to be a very good feature for the new entity. So, these are some of the features that will be applicable for the existing banks, that is the three public sector banks as well as the merged entity. Apart from this, some of the other numbers are the total deposits or the total business that will be held by the merged entity compared to the two most or the two biggest banks in India, the gross advances, the deposits which will be held by this bank, the CRAR, that is credit to risk weighted assets ratio, which will be on 12%, that is on slightly the higher side. The NPA is 5.7%, which is much lower than what is the present number for Dena Bank. So, basically you can see that this is what has been proposed by the Government of India. So, what will be the process which will be followed here? 4 steps here. 1. The board of directors of all the three public sector banks will have to sit individually and approve this particular plan of the government. And experts have already hinted that since the Government of India is a majority stakeholder in all these three public sector banks, this will not be a very difficult task. Second, once the board of directors have approved this particular plan, the government will prepare an amalgamation scheme. That is, a detailed plan will be ironed out by Government of India. Once this particular plan has been prepared, the cabinet has to approve this particular plan. Once this has been approved, this will be cleared or approved by both the houses of parliament. And once this particular process is over, the amalgamation or the merger will be taken up, and various experts have stated, as well as even the chiefs of various these public sector banks have stated that this particular process will be finished within the next 4 to 6 months. Now, what has been the viewpoint of the Government of India? The arguments which have been put forward by Government of India are: 1. A new entity or the merged entity can use the economies of scale. Now, what is this economies of scale? Basically, the branches will be rationalized. That is, you must have seen in various cities, especially in metro cities, the number of bank branches are very high. So, basically the number of bank branches will be rationalized. Second, the deposits will be pooled in, the technology will be pooled in, the financial resources will be pooled in, the expenditure will come down in the form of let us say rent, or let us say interest payment, let us say expenditures for various operational expenses, so on and so forth. So, the Government of India is of the opinion that by merging these particular entities, forming a new entity, the economies of scale can be used wherein the benefits will outweigh the consequences. Next, the government of India says this will lead to creation of a big bank. Now, couple of years ago, none of the Indian banks featured in the biggest 50 banks in the world. But after the merger of 5 associate banks, as well as the Bharatiya Mahila Bank with SBI, SBI today can be said to be one of the biggest banks in the world. It will definitely feature in top 50 banks in the world. Now, the idea is what? None of the banks in India were actually competing at an international level. That is, the banks in India were not considered to be global banks. But over a period of time, especially the present government of India is promoting this idea of a big bank. Now, what are the features of this particular big bank? This will be the third biggest bank in India, and as already mentioned, this will have the total business of more than 14 trillion rupees. The number of branches will be more than 9,500, NPAs will be 5.7%, Tier 1 capital will be 9.3%, CAR will be 12%, that is capital adequacy ratio. These two are associated with the Basel guidelines. Please go through the Basel guidelines to understand this concept of a Tier 1 capital as well as capital adequacy ratio. And if you have seen the UPSC paper for 2018 prelims, this particular question was there as one of the multiple choice questions. So basically these are the features of the big bank. Next one, very recently while addressing the foreign investors, the Prime Minister of India basically stated that it is not the government's business to run businesses. In simple terms, he is putting forward the point that more and more privatization will be allowed in case of India. More and more private sector participation will be allowed. The government of India will play the role of a facilitator of a growth rather than becoming a driver of growth. So basically in this particular scenario, we will have to promote the idea of a privatization or reduction in the number of public sector banks through consolidations as well as the mergers. Next, the big picture is that the economic survey basically recommended a strategy called as 4R strategy, wherein the 4 R's basically stood for recognition, recapitalization, resolution as well as reform. Now, under each of the heads, the present government of India especially has taken various reforms. For example, in recognition, there is an asset quality review which was conducted by RBI. Various reforms have been implemented. In case of recapitalization, last year itself, the government of India has announced a recapitalization package of more than 2 lakh crore rupees. Next, resolution. The biggest reform under the resolution has been the Insolvency and Bankruptcy Code implemented by government of India. So, since the government of India has already implemented many reforms under each of the first 3 R's, now the government of India is focusing on the 4th R, that is reform. And one of the ways that the government of India is promoting this idea for reform is through the idea of mergers or through the amalgamations. So, in a larger picture or in a big picture, the macroeconomic picture of this particular reforms are done by government of India is the 4R strategy. So, these are some of the reasons or the arguments which have been put forward by government of India in support of this merger. Now, what are the advantages or the benefits of this particular merger? First one, the number of public sector banks will come down. As already mentioned, by 2014, there were 27 public sector banks, and presently the number has been dragged down to 21, and with this particular merger, this will further come down to 19. The problem with the present structure of a public sector banks is these public sector banks account for more than 90% of the total NPAs in the banking sector. And this is a very huge disadvantage or huge burden on the public sector banks. Why? As NPAs keep on increasing, the financials of the banking sector will be affected, the credit dispersal or the loans given by the banking sector will be affected. Not to forget, the investor confidence on these particular banks will also get shattered, and more importantly, higher the NPAs, it will have a limiting effect on the growth prospects of Indian economy. So basically the government of India is promoting this idea of a merger which will to a certain extent have a limitation on the NPAs. So basically the number will come down, and second, very recently it has been seen that despite having 21 number of public sector banks, 19 public sector banks are under losses. So basically through the idea of a merger, a weaker bank has been merged with a a stronger bank or two stronger banks. This will lead to what? This will lead to transfer of NPAs or this particular weaker bank non-existent in the banking sector. So basically the weaker banks numbers will come down. So first advantage is this. Second one is as already mentioned, the regulatory pressure on RBI will come down. Third, recapitalization pressure on the government of India will also come down. Fourth, the penetration or reach of these particular banks will increase. It has been seen that of the three banks, Vijaya Bank is more dominant or more present in case of southern India, whereas Dena Bank as well as Bank of Baroda are more present in the western India. Now basically by merging these three entities, the penetration of the new entity is going to increase across India or pan-India. And more importantly, Bank of Baroda is considered to be more dominant in terms of forex earnings as well as technologically driven tools. These tools as well as the earnings in forex will benefit the new entity. So basically this particular merger will promote a penetration or reach of these particular banks. Fifth, Dena Bank as already mentioned is a very weak bank. The NPAs of Dena Bank very recently reported were 22% of the total loans given by the bank, and it was put in the prompt corrective action, and RBI had basically stated that Dena Bank will not be allowed to lend in the market. So basically what we have done is take Dena Bank, merge it with a strong bank such as Vijaya Bank as well as Bank of Baroda. As a result of this, Dena Bank will be pulled out of this particular problem of very high NPAs. The NPAs of Dena Bank were the fifth largest in terms of the banking sector. And finally, it is a very good indicator of things to come in case of a banking sector in India. Why? In this year itself, we have seen two measures taken by Government of India. One, privatization, as well as the second, the merger or the amalgamation of these particular banks. And finally, this is an indicator of things to come. In this year alone, Government of India has privatized IDBI and now has proposed amalgamation or the merger of three public sector banks. Hence, it is a very good indicator that even in the coming years, Government of India will be taking these kind of initiatives wherein they are going to promote more and more efficiency in the banking sector. So these are some of the advantages or the benefits which are associated with this kind of a merger. But having said so, there are many challenges or concerns also. What are these? Let's have a look at it. One, usually whenever this kind of an amalgamation or the merger is done, the force or the driving force of this kind of a decision has to be the synergies between these entities as well as the growth potential that is available after the merger. But various experts have stated the driving force behind this kind of a merger could be that the Government of India basically wanted to wash off its hands from a very weak bank, that is Dena Bank. As already mentioned, the NPAs of Dena Bank were very high. So experts are stating that it has basically taken a weaker bank or very weak bank, merged it with a very strong bank, thereby washing off its hands from providing recapitalization for a weak bank. So that is the first challenge or the first concern. Second one, whenever this kind of a mergers will happen, obviously there will be a cultural or work culture difference or the operational guideline difference. That is the precise reason whenever this merger will happen, it will take a very long period of time for harmonization. If the harmonization doesn't happen, the new entity will suffer. A case in point in this particular situation is the merger of Indian Airlines with Air India. The work culture of both of these entities were different. The operational guidelines were different. As a result of this, after the merger, the new entity fell into losses. And you must have read in the newspapers, now the Government of India wants to sell off a majority stake in Air India. So basically, there will be certain operational as well as work culture integration challenges. Next, human resource challenge. Whenever this kind of a branch rationalization will take place, the number of branches will be cut down, no doubt regarding that. But the question arises, what will happen to the employees which were employed in these particular branches? Let's say for example, in a street, there is one branch of Bank of Baroda, another branch of Dena Bank, and there is a third branch of Vijaya Bank. Collectively put together, there is a 40 employees in these three particular branches. Now, once the amalgamation happens, all three branches will be replaced with only one branch. Now, what about all the 40 employees? Will all the 40 employees be given employment in the same branch? It is impossible. So, basically what will happen to the employees? Although the government of India has stated that in the next 1 year, employees' interest will be protected in the form of, let's say, payment, in the form of guidelines, in the form of the safety of the work, so on and so forth. But various experts have stated that the previous example, that is merger of 5 associate banks with SBI, if you just see this particular merger when it happened, more than 4,000 employees were forced to take VRS. So basically, once the branch rationalization happens, it's just a matter of time. The employees will be forced, or there will be a looming problem over the head of the employees. That is a precise reason the trade unions or the employee trade unions have already opposed this particular proposal of merger. Next, merger of a weak bank with a strong bank will obviously have certain side effects. The best example for this is the merger of the 5 associate banks with SBI. Before the merger for financial year 17, it was said that the NPAs of 5 associate banks were totaling around 65,000 crore rupees, whereas the NPAs of SBI alone were around 1,12,000 crore rupees. The sum total of which was 1,77,000 crore rupees. So, for the financial year 17, the individual NPAs were this, the sum total of NPAs is this. In the financial year 18, after the merger has been done, the total NPAs of SBI have ballooned to more than 2.25 lakh crore rupees. And you must have read in the newspaper, for the first time, SBI in 2 decades has registered a losses in a quarter. So basically, there will be certain side effects whenever a weak bank is merged with a strong bank. And as already mentioned, Dena Bank is a very weak bank with very high NPAs, and when it is merged with a very strong bank such as Bank of Baroda, because of certain prudent measures, it has reduced its NPAs and has just started reaping the benefits of these particular prudent measures of asset recognition. Now the government of India has thrusted the Dena Bank NPAs on the shoulders of Bank of Baroda. The next, shareholders will be affected. We have seen that after the merger was announced, the market price of a Dena Bank share has actually gone through the roof, whereas the market price of Bank of Baroda as well as Vijaya Bank has been hit. This is because investors realize that this is a very bad deal for them. That is, especially the investors of Vijaya Bank as well as Bank of Baroda. That is the precise reason the market prices of both of these particular shares has declined, whereas the investors in Dena Bank know that this is a very good deal for them. So what they have done is they have increased the demand for this particular share, as a result of which the market price of Dena share has actually increased. Next, the past experience in case of India does not favor these kind of mergers. What kind of experience am I speaking of? Earlier mentioned, the forced merger of Indian Airlines with Air India has not taken off. Second one is the forced merger of 5 associate banks with SBI, which has led to more NPA problems for SBI. So the domestic experience in terms of these kind of forced mergers of public sector utilities has not been very fruitful. But despite that, Government of India is on a consolidation drive in the banking sector. Next one, what has been the global experience? After the global financial crisis, the US Federal Reserve imposed certain restrictions on these kind of mergers, especially in the financial institution mergers. Apart from this, there was a reform introduced which was referred to as a Dodd-Frank reform, and even certain protection measures were imposed through the Customer Protection Act. So basically, the global experience has shown that whenever these kind of big financial institutions are formed, if there is an adverse action, that is, if this particular big bank fails, the repercussions will be much more consequential. Next, this particular reform of merger does not address the most important problems which is plaguing the banking sector. The most important problem which is plaguing is one, the menace of NPA, and the second one, the governance reforms. Various committees and various experts over a period of time have basically stated that the interference of the government of India in the functioning of the banking sector has to be reduced, autonomy has to be given to the banks, and more regulatory powers have to be given to RBI. But the government of India very recently has stated that RBI has sufficient regulatory powers and the banking sector or the boards of the banks have sufficient autonomy powers. But having said so, various experts point out to the interference that is through Department of Financial Services, which functions under the Finance Ministry and which at various periods of time will intervene in the functioning of public sector banks. So this particular reform doesn't address this particular issue of governance reform, as well as most importantly doesn't do anything to counter the NPAs, because once the weaker bank is merged with a stronger bank, the NPAs will just shift the balance sheet, that is from one balance sheet they will be shifted to another balance sheet, but they will not be wiped out of the system. So basically all these reforms which are being implemented by Government of India, especially the present reform, are curative in nature but not preventive in nature. These are some of the challenges, concerns or issues associated with this kind of a merger. So what is the way forward? What are the steps which should be taken by Government of India? 1. The performance of IBC has to be enhanced or improved. Very recently it has been seen that despite 2 years of implementation of IBC, of more than 970 cases which have been admitted under NCLT, only 30 plus cases have been resolved. The number of cases resolved under IBC has to be increased and the recovery under IBC more importantly has to be increased. Second, most of the reforms either taken by RBI or by Government of India are curative in nature. That is, once the NPAs have been created, they are trying to address the issue of NPA. Various committees have recommended that preventive measures have to be implemented. The best example for this is a robust credit appraisal mechanism. That is, the public sector banks do not have sufficient tools to identify in which long-term projects to invest and in which to reject. As a result of this, they end up investing in various projects and many of these will become non-performing assets over a period of time. Third, the Government of India may give a very serious thought to privatization, especially once the next year Lok Sabha elections are over, and once the privatization is done, the efficiency in the banking sector is going to increase. And there is one committee which has actually recommended privatization of the public sector banks, that is PJ Nayak Committee. Next, regulatory powers to RBI must be increased. Very recently, the governor of RBI has basically stated that regulation of the banking sector should be ownership neutral. What is the meaning of this? Presently, Government of India is a majority stakeholder or the majority owner in the public sector bank, and whenever RBI tries to intervene, the chiefs of the banks are basically answerable to Government of India since they are the owners, not to RBI. Now RBI says this doesn't help in regulating the banking sector. The best case in this example is the Punjab National Bank scam. So basically the RBI says that the regulatory powers or the autonomy in terms of regulation must be given to RBI. Already mentioned, more autonomy must be given to the boards of the public sector bank so that they make their own decisions. For example, whether to merge with another bank or not should be the decision of the boards of the respective banks, because they are the experts in this particular field. It should not be the prerogative or the decision making of Government of India which is imposed on the boards of these particular banks. So more autonomy should be given to these particular banks, and this has been recommended very well by Arvind Mehta Committee, where basically they stated that the intervention of the Government of India in the public sector bank functioning must be reduced. And finally, some of the recommendations which have been given by Mr. Raghuram Rajan has to be implemented. Very recently, a note has been provided by Mr. Raghuram Rajan to the standing committee, wherein he has pointed out what are the reasons why there is an NPA menace, what are the problems in the public sector banks, so on and so forth. One of the points he has raised earlier with respect to these kind of mergers, the weaker bank will pull down the acquiring bank. Thereby, he basically stated that after the merger, we should not end up having a very big weak bank. As a result of this very big weak bank, the problems to the Indian economy will be much more than the earlier existing problems. So these are some of the recommendations to the Government of India which can be implemented or which it can implement to take care of the consolidation or the problems of the banking sector. Thank you.